Bitcoin is the most popular cryptocurrency on the market and one of the most widely traded assets. It has attracted the attention of investors including celebrity entrepreneurs like Elon Musk and Jack Dorsey. Unlike fiat currencies that can be inflated by central banks, Bitcoin has a fixed supply of 21 million tokens. This scarcity makes it a deflationary asset. What is Bitcoin? Bitcoin is a digital money that allows secure peer-to-peer transactions over the internet. It is not backed by any central bank or government, but rather by a network of computers that verify and record transactions in a public ledger called the blockchain. Bitcoin was created in 2009 by an unknown entity under the name Satoshi Nakamoto and is currently the largest cryptocurrency by market capitalization. BTC is exchangeable for fiat currencies like the dollar or euro via cryptocurrency exchanges and can be used to make purchases online or in brick-and-mortar stores that accept them. Investors and speculators can also buy and sell Bitcoin as an investment. Bitcoin was the first decentralized digital currency, and it has become a global phenomenon. Many people use it as a store of value, a way to protect their savings against inflation, or as a means to make speculative investments. The price of BTC has fluctuated wildly since its inception, and it is a highly volatile asset. One of the most famous uses of Bitcoin was when an early adopter offered 10,000 BTC, worth around $25 at the time, on a message board for anyone who would deliver 2 pizzas to his home in Jacksonville, Florida. This transaction was the first purchase of non-virtual goods using Bitcoin, and it helped to increase the popularity of the currency. Another reason for the rise in popularity of Bitcoin is that it offers a safer and more private alternative to traditional online payment systems. Credit cards and PayPal require users to provide their full name and address, but Bitcoin transactions are private by default. This reduces fraud risk for merchants and gives consumers greater control over their personal data. In addition, Bitcoin is global and can be sent to anyone with an internet connection. This makes it a convenient way to pay for products and services from companies that operate worldwide. In addition, Bitcoin is often cheaper than using a credit card, and it can be transferred instantly from one country to another. All of these features have made Bitcoin a popular investment vehicle for individuals and corporations. As a result, it is common to see a Bitcoin converter on web pages that track the prices of world currencies. Many billionaires and high-net-worth individuals now include strategic amounts of Bitcoin in their portfolios. How is the price calculated? The price of Bitcoin, BTC, is determined by supply and demand. The more buyers are willing to pay for a coin, the higher its price will be. Bitcoin's price is also affected by the currency's market capitalization, which is the total value of all Bitcoin that has been sold. A cryptocurrency's price is also influenced by its utility and scarcity. A scarce asset is usually more valuable than one that is available in large quantities. In addition, the price of a cryptocurrency may be affected by events or news that affect its perceived value. For example, if a company announces that they will start accepting Bitcoin as payment, this can cause the price of Bitcoin to rise. In addition to these factors, the price of a cryptocurrency can be impacted by its mining process and scalability. For example, the number of Bitcoins that can be mined is limited by the amount of computing power that is used to verify and record transactions on the blockchain. Additionally, Bitcoin is highly divisible, with the smallest unit being a single Satoshi. This makes it easier to purchase and store smaller amounts of BTC. Lastly, the price of a cryptocurrency is often determined by its liquidity. This is the number of Bitcoins that are available for sale on the market at any given time. The liquidity of a cryptocurrency is important because it can influence the ease with which investors are able to buy and sell their coins. The price of a cryptocurrency can also be determined by its intrinsic value, which is the amount that an investor is willing to pay for it. However, it is important to note that intrinsic value is different from the price of a stock or bond, which is determined by market forces and other factors. In contrast, intrinsic value is the value that an investor places on a particular investment, such as a cryptocurrency or a company. This value is based on the investor's goals, risk tolerance, and return expectations. It is also influenced by the investor's perception of a cryptocurrency's future value. How much is a single BTC worth? Since its inception, Bitcoin has experienced a volatile price. Like many new commodities, it has a tendency to swing wildly in value. Its volatility is also due to speculation, which is why it's so important to understand the factors that affect its price. While many concepts for decentralized digital currencies preceded Bitcoin, it is the first cryptocurrency to see widespread adoption. It is the most well-known, and as a result, it has received the most attention from investors and media outlets. This has led to some skepticism from traditional financial institutions. However, as the currency has grown in popularity, its value has continued to rise. One of the most important factors in determining a single Bitcoin's value is its supply. Bitcoin is programmed to become scarcer over time, a process known as mining. Miners verify transactions and add them to the blockchain in exchange for Bitcoins. This process is complex and requires specialized computer hardware that can cost up to $10,000. It is a costly endeavor, which is why the reward for mining is cut in half every 4 years. With only 21 million Bitcoins ever to be minted, the current supply is limited. This scarcity has driven prices higher, allowing investors to make significant profits. As the market becomes more regulated, however, these gains may slow. The year 2017 was a breakthrough year for Bitcoin, and it started off with a huge rally. This gave way to a correction, and the price fell throughout 2018. In early 2019, Bitcoin was hovering around $4,000, struggling to break through. It eventually broke through in April, and the price rallied to $13,000. It slowed down over the summer, but pushed through $20,000 in November 2020. The value of a single Bitcoin is determined by supply and demand, and it can be difficult to predict the future. While some analysts believe the price will continue to fall, others think it will rise even further. The best thing to do is research and invest wisely. What is the future of BTC? Bitcoin is the first of its kind, a peer-to-peer electronic cash system that was created in 2009 and has since given inspiration to thousands of similar projects. At its inception, Bitcoin was worth a fraction of a penny and has since risen dramatically. Some analysts predict that BTC will continue to rise, reaching new all-time highs. Others are more bearish and believe that BTC could be headed for a major correction or even a crash. One of the most important factors that will influence the price of Bitcoin is its adoption rate. If more businesses and individuals start using BTC, demand will increase and the price will go up. This is why it is so important to spread the word about cryptocurrencies and encourage people to buy them. Another factor that will affect the price of Bitcoin is its supply. The number of Bitcoins that will ever be mined is limited to 21 million, and this limit acts as a deflationary measure. This is why the price of Bitcoin often rises before a halving event, which happens every 4 years. While there are many unknowns surrounding the future of Bitcoin, most experts are bullish on its price. Some, like Digital Coin Price, believe that the price of Bitcoin will reach $140,000 in the next 5 years. Others, like Wallet Investor, are more skeptical and think that the price of Bitcoin may fall as low as $10,000 in the near future. Whether you should invest in Bitcoin or not depends on your personal situation and risk appetite. While cryptocurrencies have lower volatility than fiat currencies, they are still considered risky investments. However, if you have a large enough portfolio and can tolerate some risk, then investing in Bitcoin is a good option. Keep in mind that the price of Bitcoin can fluctuate drastically, so don't make any big purchases until you understand the risks and rewards involved. Also, always invest money you can afford to lose. If you're ready to get started with cryptocurrencies, register a free account at Cryptomat and start trading today.